Shaheen, what's wrong?
Hey Julie, actually I'm in a very bad condition. My business has been suffering losses since the past few months. I don't know how am I gonna pay my workers. I don't know how am I gonna pay my bills. How am I supposed to deal with this?
Well, the best solution that I can think of for you is to visit my friend who is the director at the central bank. I'm sure she can think of a solution for you.
Oh, I'll just go right away. I need my business to be back in full employment. Thank you so much.
Situation, Shaheen, but because everyone's going through this. Basically, we as central bank indirectly inject money into your business, and when we do that, we need the output. We do that so that your output increases, and you get more goods and services, and you can hire more employees. Now, this hiring more employees increases your output, and you have more sales and returns, which will result in the increase of wages. Under the central bank, there are the Federal Reserve who buy debts. When your business increases outputs and returns, it means higher taxes to the government. This puts the reserve in a good position to repay all the debts. Well, I therefore suggest you to go to the chartered bank who are in charge of leading the money to the consumers and business owners like you.
Well, thank you for your information. I'll take my leave now. I'll take a note of it.
Alright, thank you.
Bye. I was advised to visit you for borrowing an amount of $10,000. Can you help me out?
Sure, I can understand the need for money during this recession. We as a bank can lend you that amount at a rate of 4.5%. This amount is low due to the easy money policy that the Federal Reserve imposes due to an economic recession like this one. This policy basically aims at keeping interest rates low to introduce recovery in the economy and expand the money in the economy to encourage spending and reduce unemployment levels. In contrast to this policy, the Federal has also introduced tight money policy to tighten money supply by raising interest rates to suppress inflation growth and overspending. Therefore, interest rates and policies of this sort are maintain a balance between containing inflation and maintaining growth. So now that you know all that you need to about borrowing your amounts, I'm hoping to see you soon with the final decision made.
Well, thank you so much for all this information, but I think I do need time to think over it.
Sure.
Thank you so much.
Thank you.
Shahim decides to borrow money due to the low interest rate and also because she needs to get out of her financial situation. So when easy money policy is put into action, bank shifts its government deposits to the accounts of the chartered banks to increase reserves, which enable chartered banks to lend more. To attract potential consumers like Shahim, banks keep interest rates low. Money supply growth is increased by borrowing. Increased spending by consumers and business increases the aggregate demand and therefore GDP, which ends recession.
Definitely borrow money from the bank too.
Yeah, sure. I hope it helps you.
See you.
Julie does not take the loan due to the heavy interest rate. This is a typical example of tight money policy in action. The bank shifts government deposits from the government accounts at the chartered banks back to the government account. Banks raise the interest rates when there is a decrease in money supply. Money supply growth decreases when there is a less borrowing. Chartered banks find it difficult to lend based on their reserves. Therefore, decreased spending by consumers and businesses decreases AD. Prices decline and ends the period of high inflation.